Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now cut across to Nisha Podar, who's in conversation with Ajay Piramal, the chairman of the Piramal Group.
Thanks for that, Reema. Of course, the company Piramal Enterprises also has a huge loan book and a lot of investments in the real estate sector. So here's Ajay Piramal talking about the entire NBFC situation here. Do you see it's a crisis situation with the stocks in the NBFC sector now falling for the 7th straight day?
More than the stocks, I think we should understand what's happening in the NBFC sector. We had a meeting of analysts for half a day on the 30th of August where there were more than 300 fund managers and analysts. And when I was speaking to them, this is one big risk that I saw in the sector. I said that if there is any blow up in an NBFC, that will affect the whole sector.
Yes.
And why did I say that there could be a blowout? Because one is I find that many of them don't have high governance standards.
Okay.
The second thing is that if you see, many of them are not really worried about the asset quality as much as it is because of the valuation. Because promoter stakes in some of these companies is either absent or it is so low that people just want to cash out. Okay. And this is what has actually happened today. I mean, when you look at what triggered this whole crisis in the market,
yes,
it was because what happened with il&fs. There was no promoter there.
Right.
The stakes are so low, and therefore, I think the asset quality is questionable.
So while you're questioning the asset quality in some of these counters, and overall market is also not stalling the fall, and that's why I'm saying, is there something more that the market knows, or is there more to come? Have we hit only the tip of the iceberg so far?
I think what happened also is that because of the large exposure that one firm had, which the banks and the institution and the mutual funds had, suddenly the banks also clamped up on lending, as well as the mutual funds, as well as people who were calling back some of the loans that they had. As a result of which there was some panic in the markets, and that's the first reaction I found very often, that there's panic. Actually, things have eased out now. I've seen that the government, the ministry, the RBI has also relaxed liquidity. Yes. And at least firms like us, I find that there is funds are flowing even more than what they were earlier. So there is not as much panic today as it was. Prices may fall because people, I mean, this is the market. People react to sentiments. Either they go up and down, but I think we have to understand the underlying business. Right. Is that affected? I don't think so.
Okay, before we go into more nitty-gritties of this situation, because there is cost of fund involved, liquidity situation, and there is risk appetite, and then on the other hand, the real estate impact. But before that, Mr. Piramal, you have looked at il&fs as a buyout candidate in the past. Now that is the company suffering right now. Many investors have been looking at it. They will also be looking at a rights issue. Is it also the right time for you to enter as an investor or a buyer now? Would you take advantage of this opportunity at this time?
So first of all, we keep looking at many businesses, and every day there's a new proposal that we look at. It doesn't mean that we're going to go ahead with these proposals. As of now, we have not looked at il&fs in this present state, and we do not have any intention of doing that.
But you did due diligence, you did look at the company's books. Did you spot these issues as far as the asset liability mismatch or any default situations or risky assets is concerned?
I don't want to comment on specific companies because, as I said, we look at many companies, and not you've seen that we are pretty very selective as far as our investments are concerned. And if you'll see our track record, I would say that 90% of our investments have given us a good return. So we just want to keep maintaining that sort of record.
Okay. So while many companies right now, NBFCs, HFCs, are struggling with liquidity issues, What is the role that Piramal Enterprises and your financial services business can play in this time? Because India Bulls is also selling part of its portfolio. We heard there could be others like DHFL as well. Would you be also taking the opportunity or buying out or bailing out some of these companies?
So as far as we are concerned at Piramal, if you see, we had raised 7,000 crores as equity only in October of last year. And I remember mentioning in this conference of ours in August that we always kept 5,000 or 6,000 crores of liquidity. Some people were questioning us that why are you being so conservative? But because in this space you never know what comes and hits you, and a black swan event can happen, and we've been in business long enough to see that this does happen. And therefore, I think as far as we're concerned, we're pretty comfortable as far as our liquidity is concerned. And it's business as usual for us. And we will continue to do what we've been doing all this time.
So while you're comfortable in liquidity at your end, would you be also taking advantage of the situations that are coming up because of others facing a liquidity issue?
So I think there is actually an opportunity in this crisis, and we will be taking advantage of it in the way that we will be actually serving our customers better, I think. I see that there are many people who had committed giving funds are now holding back. For us, that's not the case. It will continue. And I think this will just further deepen the bond that we have with our customers who know that here is a reliable lender that is available for us. And therefore, in some ways, I think that the quality of assets that we'll be giving to now will be better. And the other thing I look at it is that in the last few months, I was seeing that the competition, if we did a particular underwriting, the competition, knowing the quality of underwriting, would go and lower the rates and take away the business. I don't see that happening anymore. So I see that actually in the immediate term is going to be a good opportunity for stronger companies.
Okay, that's Ajay Piramal. We'll keep cutting back to more interesting snippets of this conversation, but talking about the il&fs, the liquidity tightness, but doesn't foresee a problem for financial companies like Piramal Enterprises, considering its the size, the quality, and the pedigree.
To see that it is regulated better. At the same time, they can't put so much regulation that whole economic activity comes to a halt, because we must recognize that the NBFCs are also playing a very key role, especially as far as small and medium scale industry is concerned. The funding only comes from SMEs, and they are I was reading somewhere, I think almost 50% of GDP is in SME, but they get only a fraction of the bank funding. So if you stop all NBFCs and regulate it too tightly, then there will be no economic activity. And I don't see that happening. So it will have to be a balance of being prudent, at the same time allowing growth to continue.
Let's talk about cost of funds. They've gone very high, and there is almost a freeze in the debt market. How do you see this situation at the moment, despite RBI's relaxations, and how long is it likely to last? Will it get worse or ease off?
So the freeze of funds, I alluded to that earlier also. It was there for the first 3 or 4 days, but now with some liquidity into the system and people getting some reassurance, I think the liquidity situation has eased, at least for the better known NBFCs who have had good governance and a good track record. They are now getting access to funds. The cost of funds has not gone up significantly yet, but I expect them to go up with all what's happening in the Fed and everywhere else. The cost will go up.
And also wanted to understand the cascading impact of this, also disbursements stopping from some of the beleaguered companies in this situation. How do you see, you spoke about SMEs, but what about real estate? Because a large part of the book is in the real estate sector. The HFCs have also got impacted. So if the buyers also are not putting in money, the NBFCs are not putting in money for the real estate companies, how do you see real estate panning out?
I think what will happen is that as it is, if you saw that in the real estate there was a churn happening, and because of RERA, because of GST, I would say 90% of the real estate developers are actually almost shutting down, and there were only the top 10% that who would survive. Now I find that that churning will take place even in the NBFC sector as well as in the HFC sector, and the good ones will survive. And this is where the good developers will go to the good NBFCs. And similarly, people, it's not that there are now funds available in HFC. The better companies will be able to give out funds.
Right.
So the pressure which was there on margins for NBFCs to lend to developers, the pressure that was there on HFCs, every day you found that somebody was reducing the rates by 25 basis points. All that will ease out. And hence, again, to use your term, we will have seen the men and the boys being separated out. And I see that in the NIMs will actually go up in the next few months for the NBFCs and HFCs.
All right, so NIMs to go up.
For good HFCs and NBFCs.
All right, and how comfortable are you when it comes to your own book? You have close to about 50,000 crore rupees of loan book that has expanded quite aggressively in the last few years. A large part of it is in the real estate sector. Repayment, prepayment, any pain seen there? So
we have not seen any pain. As I have said before, our gross NPA is only 0.4%, whereas we provide for 1.8%. In fact, as far as we are concerned, we had reported India's reporting, which was not mandatory for NBFCs till now, but we had done that. We have a very strong governance system. We have a board which is very highly experienced. We have Mr. Vagul, the former ICICI chairman. We have Mr. Deepak Satwalekar, who was the MD of HDFC. We have in our risk committee Mr. Deven Sharma, who is a US-based person who used to run Standard & Poor as the CEO. So we have people who are pretty well experienced in it, and we are very conservative. And as I said, the most important I find in all this is that we probably have the largest promoter stake that anybody has in an NBFC.